Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets end of day analysis on the for Thursday, the 4th of February 2016. Okay, let's try and decipher exactly what's been happening here. Okay, so the video has been brought to you courtesy of CFDs.com. Be sure to visit the website and certainly qualify for the potential 25% cash bonus. Alternatively, visit cfds.education to certainly learn more. Okay, now let's try and decipher and understand exactly where these markets are positioned. Just to confirm, the US markets managed to reverse quite powerfully late in the session, so a very impressive move there. Okay, the FTSE was certainly finishing the red quite substantially, down minus 1.4%. The DAX finished quite substantially in the red, and the French CAC did as well. So certainly a negative day in Europe, and that was led by a number of things. Now, first of all, we had concerns with regards to Italian banks, the banking sector. As you can see here, if I bring up the actual DAX banking sector, you can see it's absolutely been crushed. We're making new lower lows and lower highs, and it certainly is in a downtrend quite substantially, given the fact that we had concerns with regards to Deutsche Bank today. So certainly substantial losses in the banking sector. Now, in terms of the actual economic data itself, we had the Nikkei down quite substantially overnight. Hargreaves Land down, German PMI actually worse than forecast. US ISM and US PMI certainly worse than forecast as well, which sent the markets spiraling down. Now, we had concerns with regards to the yen and obviously the euro as well. Now, if I bring up the chart, the euro USD, you can see post Dudley's comments that certainly sent the whole market into a tailspin. You can see that the euro appreciated quite substantially. You can see here the move from 1.09 up to 1.11, almost a 200 odd pip move on the euro USD, and that obviously triggers a risk aversion trade. Now, we had the actual yen appreciate quite substantially as well, so certainly hurting not only the euro. I mean, we all know that the euro and the yen are the two potential QE currencies, so if they appreciate, then the markets are indicating to you risk aversion, and that's exactly what ensued. Okay, now in terms of economic data overall, we had UK PMI beat, we had Italian PMI more or less in line, French data more or less in line, Spanish data actually beating slightly in terms of the market there. The Chinese indices certainly finished flat. We had Chinese data out overnight that actually was better than expected. Retail sales in the Eurozone actually came in more or less in line and flat. So it was the US session that certainly exacerbated the sell-off, although we did have weaker earnings out the European markets as well. So certainly concerns there. Okay, now, with regards to the actual market itself, let's try and decipher it from a technical perspective. So just to highlight the concerns that we had with regards to the market itself was mainly led by the yen appreciating and the euro appreciating. Okay, and that was due to several factors. Again, the oil price certainly rallied quite substantially, so we can't blame oil today. So let's try and decipher this market. So bring up a weekly chart first of all, given the carnage. Again, we're going back into that gap fill support at the 2870 level on the Euro stocks. The daily chart, again, we're going into double bottom support. We're still in that bearish channel. I did expect that gap fill to close on this inverted head and shoulders for a pattern, and that's obviously failed. 60-minute chart of the Euro stocks, again, a potential bottoming tail here, and certainly looking very bullish from the 2880 level, although we are now trading in the 2930 level where we last finished. Okay, so that certainly needs to be taken into consideration too. Okay, so if we do manage to make a move or reverse higher, then you are looking at these two resistance zones, 2560 and 2945, as the two zones of resistance for the Euro stocks. Again, we have this downward sloping trend line in place. So if you just take the pivot high from here, connect the pivot high from here, and that certainly is your zone. So we are looking at potential resistance at this 29. Well, it depends where the Euro stocks opens tomorrow, but you are looking at 29.20, 29.10. That's potential resistance. If you can break out of that, then yes, the bulls are certainly back in control. Again, it's lower lows, lower highs. So again, previous support equals resistance at 29.05, and that's a zone that we need to break. If we go break above there, you are looking at 29.40 as the first resistance zone, then gap fill resistance at 29.50, and then obviously previous support equals resistance at 29.65, and so on. So they are the levels to watch going into tomorrow in terms of the Euro stocks. Now we can cross verify the Euro stocks with the S&P Europe at 350. Now this certainly has negated the inverted head and shoulders pattern. Okay, so again broke the support level. We are into lower lows and lower highs. The next potential support we had was here, and we certainly held that last time, or this morning should I say, and during the day. So they are the zones to watch. Again, we are in this pattern of lower lows and lower highs, so that's certainly something that you have to respect, folks, in terms of trading, etc. So again, lower lows, lower highs. If we just connect the pivot lows together here as well, we should get our additional low. Okay, there we go. So in this channel, whether or not we can stabilize here and potentially put in a double bottom and hold, etc. So again, tomorrow will be key with regards to the price action in the market. Now, given the fact that the euro is trading at the 1.11 handle, it certainly isn't exactly comforting going into tomorrow. So it should be interesting as how the market certainly reacts. Okay. Now, in terms of the 60-minute chart of the S&P Europe 350, you certainly do have a bottoming tail here. Okay, so that certainly is your bottoming tail, so certainly watch out for that level there. Again, you have a horizontal support on the euro stocks. If that fails, then obviously we go even lower. Now, given the fact that the euro itself has appreciated, that is certainly understood and will be classed as a potential risk aversion trade. So that certainly needs to be taken into consideration going into tomorrow. Okay. Now, looking at the stock 600 again, this is another chart that's very helpful in terms of gauging where this market is currently positioned. We obviously have been taking out that previous low. Going back to the weekly chart, again, you are holding or just about holding onto that 200 MA, certainly clinching onto there. Even with Mr. Draghi's QE, we're failing to hold. That certainly is not a good sign to observe. So again, you're into that bearish channel. So again, you need to respect that. Okay, and again, the double bottom support. We have double bottom support. Obviously, we've closed the gap, so gap fill support for now on the Euro stock 600, and it's whether or not either we hold that gap or we obviously confirm that double bottom before we move and rally to the upside. So again, we need to break out this pattern of lower lows and lower highs for the bulls to really take control. Okay, that certainly needs to be understood. Okay, in terms of the alternative indices, let's look at the DAX itself now. The DAX, although after hours we were trading below that key support level, we have managed to recapture that now. The DAX now is trading at 9525, so that certainly is a good sight to behold. Okay, given the fact that our pivot low on here was at 9350, we've certainly bounced from there. The 60-minute chart of the German DAX, again, it's all about a double bottom support now. That double bottom support at 9315 will be the pivot to trade off in terms of the following session. So again, something to adhere to with regards to the trading going into tomorrow. Okay, so 9315, and that will be your support zone. 10-minute chart is not really giving anything away other than the fact that we have an unfilled gap above, although we did fill this gap today at 9580, and obviously the market sold off quite substantially. We have the unfilled gap at 9760, so again, a lot of work before we actually get back up there. So certainly something to adhere to. So 9580 and 959600 really is a key resistance level. Given the fact that we're already at 9525, you are looking for a potential pullback. Okay, in terms of the French CAC, let's bring up the French CAC now. Okay, again, looking at the daily chart of the French CAC, we seem to have held the gap fill support. Again, similar on the French CAC itself. We haven't actually tested that low at 4070, so that certainly is a good sign. Given the fact that the French CAC certainly managed to close around the 4260, 4270 level, that again is a positive sign. So we need to see whether or not we can actually confirm this inverted head and shoulders pattern. So your left shoulders here, the head is here, obviously You haven't tested the head as of yet, and you are looking for a potential inverted head and shoulders. Now again, if I do my US market analysis, you'll see that that inverted head and shoulders is also can be observed on several US indices as well. So that certainly is something to keep an eye out for. Okay. Now in terms of the upside, you have an unfilled gap here, unfilled gap here, and two unfilled gaps that need to certainly be targeted. So that's basically what we're looking for. Okay. Now looking at the actual FTSE 100 itself, let's bring up the chart of the FTSE 100. Look at the weekly chart. Again, we're testing those lows at the 5780 region. So again, retesting those lows. Daily chart itself is retesting the fib 75 to 61%. So again, potential support. Now, given the fact that oil has traded up to $32 region, that certainly will support the FTSE itself. The FTSE does have multiple resistance zones at 5900, 5915, so that will be a tough zone to crack through on the actual cash price tomorrow. So again, all eyes on that 5900 zone, which we're currently trading at 5915, 5915, 59110. So that certainly is a solid resistance zone. The 10-minute chart on the FTSE 100 itself, again, you had previous support equals resistance at 5850. We certainly cracked through there, and again, previous support equals resistance at 5882. So we certainly seem to have cracked through there as well to a large extent. Okay, the FTSE 100 basically has a resistance at 5850, obviously 5880, and then we are looking at the key resistance at 5910. Given the fact that the indices is now currently already trading at this current juncture around the 5900 level, that level will be the key at 5910 and 5900. Obviously, if the Asian markets close down quite substantially, then the FTSE can certainly open up lower and will certainly face resistance. Okay, so I think that's a good summation of the FTSE or European indices. Again, on the FTSE, it's 5900 will be the key, 5900, 5920 will be the key resistance zone to hold in the interim. Okay, I think that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.